Let's talk about company GE Vernova, which participates in the infrastructure layer in the hierarchy of the economy, including data center infrastructure and energy.
We'll do our typical thing here and talk about noteworthy items impacting the business itself and the industry that the business participates in, because GE Vernova announced an acquisition, a use for some of that cash we've been discussing.
And just as a reminder, where we classify GE Vernova, we put them in the specialty energy and service equipment. They're in yellow in the left-hand side of the chart in our semiconductor industry flow. And here's that sneak peek we talked about. This is part of our semiconductor supply chain analysis.
When everybody gets into the back end of the website and you start tinkering around, hopefully within the next few weeks, you'll see two layers. First is an industry level layer, which is what you're looking at here. But GE Vernova doesn't fit into the typical semiconductor and electronics manufacturing supply chain because they're primarily an energy grid equipment supplier. So when you dig deeper into this tool, you'll also have a company specific supply chain. And so here's the company specific supply chain for GE Vernova. And we have upstream dependencies, basically suppliers that a company relies on to get their business running, and then the downstream customers, who they sell their products and services to. One is to just get a feel for how the company fits into the economy and the industry it participates in, who their customers are. But another way, as you've hopefully come to know and realize, is it kind of creates like this cycle of continuous idea generation. And so in putting together GE Vernova's supply chain, we wanted to call out one company in particular, given all of the rare earth meme stock mania. What do we want to call this right now? Frenzy. Meme stocks are the new AI stocks, which are the new SaaS stocks, which were the new crypto, I don't know, fill in the blank. ATI Materials, ticker symbol ATI, a key supplier of the element hafnium, which is used in the rods used in nuclear reactors, as well as in a lot of titanium alloys. So trace amounts of this hafnium used in titanium alloys. And so this ATI Materials, a key supplier of those titanium alloys that GE Vernova uses in wind turbines, gas turbines, so on and so forth.
You're going to see a number of charts from our friends over at fiscal.ai, sponsor of today's video. You can get 15% off any paid plan with the link here in the video or in the description, fiscal.ai/CSI.
We used fiscal.ai to do a comparison of GE Vernova with its top two industry peers, ABB and Siemens Energy. One handy feature of fiscal.ai and its analysis of company financials is you can run the analysis both in US dollars or in local currency. As you can see in this chart here, GE Vernova reports in US dollars, ABB in Swiss francs, and Siemens Energy in euro. Really handy, especially if you are investing in companies outside of your home market and you need to factor for things like currency conversion risk.
Check out fiscal.ai/CSI. You can get 15% off with that link.
This is GE Vernova versus ABB and Siemens Energy revenue.
Big companies, obviously, across the board, kind of neck and neck. Each of these companies has a lot of moving parts and pieces to it, but all of them overlapping quite a bit with what they do, and roughly in the let's call it mid 30 billion per year revenue range. And all of them growing at a pretty healthy clip. Siemens Energy in particular growing, I think, in the low teens, or expected to grow in the low teens percentage rate this year. ABB kind of a bit of a laggard. And then we have GE Vernova. So let's talk a little bit about GE Vernova, because their organic growth rate has been forecasted to be somewhere in the high single digits. But they have a lot of ways that they could either accelerate that number or just keep that number going for many years to come. because of the balance sheet that they were left with after the spinoff from the old GE parent.
They have a clean balance sheet, no debt whatsoever. Their total cash and long-term investments over $9 billion, closer to $9.9 billion. So let's talk about how they might use that.
Here's how they're going to use some of it, anyways. They are going to acquire the 50% stake in the joint venture Prolec GE that they don't already own. The joint venture is with a private company out of Mexico. The joint venture that makes transformers, which change voltage levels either up or down, the voltage being electrical pressure, so that the final voltage that arrives at your, let's say, your device at your home, your smartphone or your PC, matches what it's rated for, using coils that are usually wrapped around some sort of iron core. And so Prolec makes all sorts of transformers, big energy grid transformers, smaller distribution level transformers, and then for specialty electricity grid parts and pieces like solar or wind, they also make transformers for that. Interesting thing about this joint venture, though, as a result of this, Prolec GE basically gets to sell to North America, and GE Vernova doesn't. It has like a non-compete. So by finishing off the 50% of this joint venture, it kind of opens up GE Vernova to be able to participate in energy grid build out more fully, both in North America and also internationally, by just getting rid of the JV complication and saying we're going to do it all ourselves. This is the high level reason why GEV wants in on this market in particular. You can see the part of this slide on the left, the CAGR growth rate, estimated CAGR growth rate for electrification. That's what GEV calls basically their energy grid business from last year through 2030. So let's just call it maybe the next 5 years, roughly expecting a doubling in the total market for energy grid in North America specifically.
And here's the transaction overview from GEV. The purchase price is $5.275 billion.
So what the balance sheet will look like after this deal is finalized is you'll see cash and long-term investments get reduced by roughly 2.5 billion, $2.6 billion. So it'll come down to closer to 7 billion in total. And then you'll see a new bar that represents debt that'll be worth about $2.6 billion as well. So at the end of the day, GEV will still be net cash positive of almost $5 billion after they make the acquisition of Prolec. A good use of their balance sheet, in our estimation, gets them playing in a bigger part in the energy grid build out. And this is going to be accretive to their adjusted EBITDA pretty much right out the gate in 2026. There's of course going to be synergies, so they're going to squeeze out some of the expenses when they merge Prolec with GEV's transformer business. But we mentioned also being able to participate in North America because GEV has that non-compete currently. And of course, one thing that they really want to get ready for on the right-hand side of this chart, HVDC, high voltage data centers or AI data centers. So all of that kind of part of the energy grid build out conundrum that everybody's worried about. Is there going to be enough power? How do we get all the power to these data centers? There's lots of engineers working on this problem. And GEV continues to be, in our opinion, one of the better ways that you could participate in this, maybe not a secular growth trend, but at least a secondary beneficiary of a secular growth trend right now.
Okay, and here is their revenue breakdown. Power revenue being the largest portion in orange, wind revenue, which they're streamlining in purple, and electrification in green. And that's where that Prolec acquisition is going to come in, correct?
Yeah, that's right.
What about that blue bar?
Yeah,
total adjusted EBITDA.
So maybe high single digit revenue growth isn't the most exciting business, but As GEV grows that electrification part of the business, and now including with Prolec, especially starting in 2026, they streamline the wind business, as you just mentioned. That adjusted EBITDA number has improved greatly since they got spun off of GE. And that adjusted EBITDA margin will continue to improve rapidly over the course of the next few years. So that's really the story here. Remember, there's two levers to every growth story. The first one is revenue growth. The second is profit margin expansion. And so GEV very much a profit margin expansion growth story right now.
Okay, let's take a look at valuation, both on a price to earnings and price to free cash flow, both on a forward-looking basis, mid to high 50s. So it's not nearly as cheap as it was.
Yeah.
To say the least.
When we did the initial deep dive last June or July and called it out as a top energy grid data center power idea, it was obviously mispriced after getting spun off of leftover GE Aerospace. So that cheapness is gone. But thanks to the profit margin expansion, the use of the net cash balance to make some key acquisitions and integrations in that electrification business, this still could be a reasonable buy for the long term. This is one we still like, especially for those of you that are still looking for big industrialist companies to incorporate into your portfolio, looking for some way to invest in the power grid, data center power, all that good stuff. We still like GEV here.
Make sure you hit the subscribe button, hit the like button, share with your friends, and check out Semiconductor Insider. Link gets you access to all of our research. Check it out at chipstockinvestor.com.